If I had a hammer, I'd hammer in the morning, I'd hammer in the evening, all over this land. I'd hammer out love between my brothers and my sisters, all over this land. Well, hi, nice to see you. My name's Rocky Outcrop. I hope there's a lot of love between my brothers and my sisters out there, so I don't have to come round and start hammering you. Eh? Right, hit like on that video. That's this video. This video, what you're watching now, hit like on it. This is your morning financial show. I'm a human being from planet Earth. And on this Earth, what a select group of people are able to do is understand how financial markets move around and thus make profit off of them. Laughing in the faces, the wet, weeping faces of 90% plus of the rest of the market that actually loses money all the time. Oh, ooh, yeah. Well, good morning. Good to see you. I'm very glad you joined me. It is just after 9 a.m. if you're in Easty Sandy time or whatever that's called. Oh, Easty Doobie time or something like that. Is that what it is? Welcome to the show. And of course, I'm over here in good morning time. So it's actually just after 2 for me. Had to double check that. I should know that. I should know that. Anyway, so we'll be looking at stocks and shares and shiznizzles like that. Got a wee dono in here from Vic. I'm sensing blood in the waters for USOIL for our flesh feel then ga. Maybe I'll try that short again. Don't know why I gave you that accent, Vic, but you've got it. And yeah, ooh, are we going to get one? USOIL. Yes, from USOIL. USOIL. It's like U-Haul, but it's USOIL. USOIL. That's the ticker there. USOIL. It's USOIL. It's a great company for anybody that they sell incontinence trousers. They sell incontinence trousers. You know the big floppy trousers that you can pull a cord at the ankles of, and it catches all of your jobbies. That's USOIL. So we'll take a look at that. Vic thinking he wants to short it. Ooh. Let's go. Notifications working. Hey. Yes. Brr. The Discord notifications are working. Well done to Christy for sorting that out. And thank you to everybody for being a part of the Discord. If you want to join that, then you join that. You just join that. You just go ahead and join that there. If you want to join it, you just go ahead and join it, right? Easy to do. https:// patreon.com/rockyoutcrop. You'll recognize the logo and whatnot on there. Yay! Excellent. Thanks so much for joining me as ever, everybody. We're going to be doing stocks, technical analysis, and all the good stuff. Ooh, whoops, just get a phone call. Okay, I'll be with you in just a second. Hiya friends, so we're going to be jumping into these charts here in just a minute or two. I'll be removing my background and all that good stuff. Now that one that's up behind me right now is the chart for what do you call it, for thing. Oh wait a minute, me get right. Hey, just a second, sorry. I'm a man. I struggle to dual task. I am online, live. I am streaming. I'll say streaming. I'm streaming right now, but can help out when needed. I think, something like that. That should hopefully help. Oh, I don't know. Hard to know. Right, I think that was polite enough what I said. But so moving on. Right, so I'll be looking at these things. These are called charts. And in the background of me right now, that's where they exist. And what I'll be able to do is jump between these two screens. But I will also put myself up in space. If I had a spaceship, I'd look something like this. Well, that's not actually accurate because I'd probably be inside of the spaceship instead of over like here when I'm floating in space. Where's all the oxygen at? Where's all the oxygen at? It's gone. I'm in space. I'm in space, bro. Yeah. Right. So all that good stuff, that's going to be happening just like that. Isn't it fun? Isn't it fun? So what I'll need to do though, before all of that, is some squats. Have you joined me? Have you hit the like button? Have you done that? Right, so good, do that. And I'll just get on with the squats. So I'm going to do 15 squats, right? And I thought that the way to do them would be to do them in sets now, right? Now, this is, I don't actually know if I'm really even psychologically prepared to go on to do sets. I'm not even sure if I'm psychologically prepared. Because it's a new era at that point. What would happen after that is, after we get used to doing sets, and I'll explain what sets are in just a second, is instead of adding 1 to the total and going from like 15 to 16 squats, we'd add 1 squat to the sets. So if I did 3 sets of 5, so 5 squats, then a tiny break, then 5 squats, tiny break, 5 squats, done. Then when the next time it comes to adding a squat, it would be 6 squats, break, 6 squats, break, 6 squats, break, done. That type of idea? Oh my goodness. So I'm not sure if I'm at that mental preparedness for that yet, because it's a big commitment. And I'm not overthinking this. LFG, shall we get the squats on the go? Make everybody feel bad? Let's just look in here. Amber's here, good. Pam's here, good. Observe thyself, good. Is that right? Just checking, making sure. Yes. Sensing blood in the water for USOIL earlier on. Yes, well, blood in soil does make for good soil. Yes, we've got GA here. We've got Corey. We've got Bunsen. We've got Frog Lord. Ashley. We've got Duo. We've got Kachito. Right, great. Harley Hellcat. Okay, so a lot of good people in here. But when the likes of Kim and whatnot arrive later on, and they say, have they done the squats yet? Then be sure to say, yes, we have, because we are, we know how to get out of our beds in the morning, unlike some people, or something like that. Lots of chatter about LRC. We'd love to hear your TA, especially in light of the 24-hour news. LRC, Lord of the Rings Company. That's what that one is, isn't it? Lord of the Rings Company. Lots of chatter about Lord of the Rings Company. Cool, we'll take a look at LRC, Lord of the Rings Company. We'd love to hear your TA, especially in light of the 24-hour news. The 24-hour news. Back again with the 24-hour news. And it turns out that Lord of the Rings Company has had lots of news in the last 24 hours. More with that soon. Loopring. Of course, that's Loopring. Of course, it's Loopring. People love a bit of Loopring because there's some sort of tenuous connection between somebody from Loopring and maybe somebody on the NFT project that Gamestop are working on. Is there something like that? I'm sure that this thing is growing all sorts of legs in the world of Reddits, but you know, for me, I just simply look at charts. So what would I know? So we'll go over and look at Loopring and we'll give us our opinion about it, and then you can combine our unadulterated opinion from the news with whatever it is that you know about before we go in and mess it up with news. Let's squats. Set 1. Set 1. Oh, I can dual task. I actually can dual task if I don't have to open my mouth. Set 2. Close. Right, I've got no idea how many that was. And a wee break. Hope you're keeping count. Set 3. 1. 2, 3. Have a wee rest down the bottom. I'm actually having to hold myself up. I'm getting tired. Oh shit. 4. Right, we did it. We did it. And the reason why we did it is because we're simply the best. Bam, 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 bam. Better than all the rest. LSG, let's go look at some pre-market pricing. Woo! What's that? What's that? What's that? That's Gamestop. A Gamestop. That's what they call them in Norwegian. Eh? I'm still doing more squats. Well, Pam, you're probably about to jump on a treadmill and then like do some weights as well. Well done, Pam, you legend. Hey, fun fact, did you know that black cats have yellow eyes because they have a lot of melanin? Now you know. Thanks, Chippy. Wow, awesome. Fun fact. What's that? That's Gamestop. Oh, hello, friends. Are you trading Gamestop like me? I'm a trading Gamestop. Actually, no, I'm just hodling it. Right, great question just came in there from J to the MFO. Yeah, let's get that up on screen. Leave the message from Pam in the meantime till it appears on my doodah. She's still doing squats. Good luck, Pam. Squat, squat, go Pam, go Pam, go Pam, bam, 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 bam. We're all cheering you on. Right, J.O., if it fits in Yawa lessons today, can you help us understand if we can use fibs made on the 1 hour confidently as support when looking at a 3-minute time frame? Brilliant. Let's just do that at the same time as taking a look at GME. Oompa, pardon me. Here is the 3-minute time frame over here. One of the things that we were looking to on the 3-minute time frame, as they say on Paris, was this 171.5 or spot 5? Eh? 171 spot 5. Oh, I forgot this is Norwegian. 171.5. That's not a Norwegian accent, by the way. No, 171.5 on the gym is. But right, so that's our target, 3-minute target. That was because of this proprietary indicator here, which we have, which is amazing. So we were talking about this yesterday when it was up here, the highs, whenever it was, and we said, oh, look, we're going to be bearish on this. We're looking down to 171.5. Couple of little neat things that you can do is as well, you can kind of check to see if we'll be pushing any further by doing a little neat thing, which I'll be explaining in the future. But here's something to give as a reward to all of the people who've been using this thing for quite a while and are looking for some more of my sort of input back about it, by the way. And if you actually take a Fibonacci yes from where I drew it from, I know this is not your usual way, but this is how it goes, to the peak then thereafter, if you're looking to see if there's like a sort of if there's going to be follow through beyond this, then at the time in the candle or the candle following from taking this out, if we go in and go to the 1.13 fib level, with we got the 1.13 fib level with just wicking there and effing off straight away again. But if we do that right away, immediately, then we can expect a bit of follow through. If we do not do it right away, immediately, then we can probably expect the prices to go back up. Okay, so there's like one of these little qualifiers that people no doubt out there are looking to have. Go ahead and on that one if you want to like look back over time and see if it actually is fact checkable. Anyhow, blum 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 wow wow. Yes, mate. Right? Watch. Here on this Timmy time frame, which is the 3-minute time frame, I will draw in a Fibonacci. The sensible place for the Fibonacci on this chart, as it looks right here, would be from this low at $167.24. Taken from this low to this high at $185. That's the Fibonacci. That's where you're looking for immediately on this, in terms of this retrace to the downside. Let's go to the 1 hour time frame. On this 1 hour time frame, where would you draw in your Fibonacci? Let's just do this again real quick. It would be from this low, which was over here at $167.24, my friend. And then up to this high in here at $185. Let's see if the two of them have any overlap whatsoever. Yes, yes. It appears they do, indeed, share some of the same space. Wow! So that would be the first main component of this, right? Is that when you're using Fibonacci to make measurements in the markets, you are actually looking between a couple of key points. You know, you're looking from, say, over here at this extreme low, which happens to be just a little wick here on the 1 hour time frame, up to this extreme high, which happens to be a little wick here. Now the question in terms of changing between time frames becomes much more complicated if you were to be drawing in your Fibonacci's body to body, where you can see that if I were to draw this in body to body on the 1 hour time frame, or whatever the hell this is, yeah, the 1 hour time frame, body to body, and we'll make this one red so you can see it, or orange, 3-minute time frame to look at. I really hard at that. I am a little bit disheartened with things. I'm still not sure if this is working live. I do really appreciate it if anybody has joined me. My little chat snippets thing just worked there, or you know, broke. I had to fix it, which is a signal to me the internet might be working again. And I'm going to just make a little sort of education video and kind of wrap up, because it's very disheartening. Probably that. I don't know. I'm going to try. Wait, I mean, we know to stay positive is the key here, though. So that's what I'm going to do. We know that staying positive is the key, and that's what I'm going to do. Really. So, I mean, what kind of silly person would get distressed about that? Oh. 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 Tired today as well. Right. I'm going to make a little clip here. Staying positive for the win. Right. Yeah. So what we want to do is make a clip. That chart loaded up. That's pretty good. Right. So what we'll do is we'll make that little clip. Hello, my friends. Somebody just asked me there now in the live chat of my live stream. That's too many words. It's the wrong words. The wrong intro words. Hold on a second. Can you use Fibonacci's drawn in on the 1 hour time frame to establish where support and resistance might be on the 3-minute time frame? Indeed, can you do it on the 3-minute time frame to establish where support and resistance might be on the 1 hour time frame? Are Fibonacci's operating across time frames? This is a common question from traders. It's a really great subject to explore. Let's dive into it right now. Hit like. Those are my intros. Enough with the intros. Here we go, right? This is the chart. This is an example of a chart. I know it's a fairly busy one on here because of all the different drawings and stuff. A lot of those drawings are actually Fibonacci though. This particular chart is the GME chart. It's GameStop. It's a popular stock that's traded at the minute, and especially amongst people who are in the audience right here who hold on to it. So let me know down below if you trade this stock. Put a comment in there. That'd be cool. Look back in the future. It'll be interesting to see how this price lines up with whatever price it is in the future as well. Currently, it's $175.05 at pre-market. I want to get this video done before markets open up because we do live market shows here as they open up for us. So this is a Fibonacci. Actually, I've got several Fibonaccis on this chart. I'm just going to actually get rid of everything so you can see properly. Frustrated much, Rocky? Hi, friends. Fibonacci's drawn in on the 1 hour time frame. Do they operate as support and resistance on the 3-minute time frame? Vice versa. A Fibonacci drawn in on the 3-minute time frame, will it show you the support and resistance areas on the 1 hour time frame? And so on. Will Fibonacci's work across combinations of time frames? What are the things that we need to know about this? Are there any key considerations? Well, there is one. All that you have to do, you've got one job. One job is to hit the like button. I'll deliver the understanding of this to you. Here would be my intros, but I'm going to skip them for brevity to make this video nice and accessible. Here's a chart. It's the GameStop chart. I've got an indicator on here at the minute. It's my own proprietary indicator. I'm going to leave that on. I've also got some moving averages. I'll leave them on as well. But what we're primarily talking about right now is, of course, Fibonacci. Here is the 3-minute chart. We could draw in a Fibonacci on the 3-minute chart here and see how it lines up on the 1 hour chart. And are there any considerations there? We could do several of these to make configurations and comparisons backwards and forwards, but it's actually quite simple to explain without even changing the chart that I'm on to make this point. If I just take out the drawing tool here and point out a couple of things, this high right at the very top here and this low right at the very bottom here are the key points where I would draw a Fibonacci going between these 2 points just here. Now, on the 1 hour time frame, these would still be the same points that I would draw this between. So the 2 Fibonaccis would look exactly the same. When would they start to look different? Well, if you draw in your key consideration, if you draw in your Fibonaccis going from body to body, here on the 3-minute time frame, you draw in your Fibonacci on this one from this right beside this wick. There's a body closure that's really close to that one, and you go right the way up to this. You see the body closure right at the very top. That'd be very, very different to how it would look on the 1 hour time frame. So let's just do that instead to show you what that would look like going body to body, so you get an idea of this key consideration for you. Actually, in terms of this Fibonacci, it's a bit hard to see. I'll make the color of it white. Ding! Easier. Right, let's jump up to the 1 hour time frame. And the that loaded nice and quick, which is nice for me. So we so where would we draw it in from? Let's just zoom on in a wee bit and have a look and see. So wick to wick, as you can see, those would be the same Fibonacci. However, body to body, suddenly you're looking at different Fibonaccis. So this is one of the considerations of what are the differences between body to body and wick to wick Fibonaccis. Now, you don't combine bodies and wicks. You don't combine bodies and wicks, but that's an interesting point as well, because if I've just gone body to body here with this one and I jump around a couple of different time frames, I can see that this is above the body here, and over here it's gone below a body. So it's neither body to body or at all. If I go to a different time frame, I can see that here it's at a body, and down here it's cutting into bodies as well. But you can imagine a scenario where you're at a wick, you're at a body. It's different across the time frames. Whereas, what do we notice if we were to use the wick to wick? Same every time. So that's the biggest consideration, and that's one of the key components and a really big understanding of Fibonacci for you right there. This is a particular slice into the idea of Fibonacci from that angle. because which is really interesting if you're interested in the wider use of Fibonacci and the conversation about why you use wicks and why you use bodies. That's a really great way to approach that conversation. There is another consideration for us. We can see that this particular one is spread out over quite a distance, and that we're looking down the way here. Maybe we want to look at some Fibonacci's drawn in here from the highs to the low. Let's just draw one of those in just now. This is the 15-minute time frame that I ended up on. There's a high, here's a low, again going wick to wick like I want to. Markets just opened on this one, flying towards the top side. Wonder if we come in and fill this gap during the making of this education video. That would be interesting to see. Bit of nice momentum here, good one. I'm still actually considering as well, as it happens, if I just jump down to the 3-minute time frame and show you my wee proprietary indicator, we might have a little target down here at 171.5. Something to look back on in the future. Anyway, cracking on with the education, 15-minute time frame. I was trying to make the point about moving from this high to this low here, and then how we might think about on different time frames, even from the 15-minute down to a smaller one like the 1-minute time frame, that there's such a big gap between the 236 and the 0 here on this, that you might be thinking in terms of how you're actually trading between those levels, that those levels are too far away for you to effectively trade between. We can see here that although we got very clear signs of support and resistance, for example, right in here, very, very clearly, we can see in this point there were movements between these areas which were maybe not fully encapsulated with those Fibonacci. So if I just undo those little drawings I put on just a second ago and draw in a Fibonacci between these 2 points here on this smaller time frame itself, going from there to here, we can see, and I'll make this a different color as well so you can see it a bit clearer. I'll make this one all orange, right? So you can see here that there's numerous different interactions. Here's the 1, here's the 886, here's the golden pocket. We see that we came down to the 236, bang on, up to that golden pocket. Beautiful, beautiful Fibonacci. And all of this happening between two levels. So while you absolutely can, as I demonstrated right here, we see that there's a Fibonacci drawn on from the 15-minute time frame, which operated as support on the 1-minute time frame. Very, very good. We can see that there's actually as well resistance here towards the top side, and that in between there's these levels where another Fibonacci worked quite nicely, coming in for a nice 382 before getting continuation on. Stice, right? Brilliant. So anyway, this is flying towards the top side. Brilliant stuff. It's what I really wanted to see, of course, today. But still considerations for us. Momentum traders coming in, carrying with us today. Excellent stuff. Nice. Let's see how much excitement this gives us in the opening range. I'm about to crack on now and start doing that with the live audience who are very patiently waiting for me to come back. There they are, just there. Thanks so much for tuning in. Join us, join them, say hello to each other, and spread the love. Aha. Thank you. See you again soon. Right, great, excellent. That's that clip done. Back on with the charts. Thanks so much for putting through it. Hope that will help you answer your question, pal. I thought it was a decent little clip to make as well. I don't know if anybody has ever explained things in that way before to anybody, but I'm pretty sure that comprehensively covers that in a way that's not available in any textbook in the world ever, because I've read quite a lot of them and none of them fucking have a clue. Right, great, excellent. Smacking, cracking on. This thing here, roaring, success towards the top side. Great big gap down here. 1-minute time frame though. Are we concerned about that 5-minute time frame? Just checking through them. 15-minute time frame still got that gap there. 30-minute time frame still got that gap there. 1 hour time frame. Oh, internets. 1 hour time frame still got that gap there. 4 hour time frame still got that gap there. Rocky's on fire today, says KP. Thanks so much, man. That's great. Irem, nice clip. Thank you so much. Thank you so much, Maria. That's so nice. Quality. So Homer's Ghost, golden pocket equals most profitable target area. No, golden pocket isn't most profitable target area, Homer. The most profitable target area, like for instance right here, let's do the GME technical analysis on the 1-minute time frame with regards to where this move is coming at and where we could potentially see it go into and how we might work this out. Looking at here and saying, well, where's our key areas? Maybe here and maybe here, right? Just maybe here and maybe here. Let me just ditch all the drawings again. Fuck, screw it. I'd hate doing that. Actually, no, I'll go back. I want my old drawings on GME. Hold on a second, everybody. I've got no idea how many of them. Need to go right the way back till I run out of undos, because I'm pretty sure I hit the bin bucket at the start of that education thing. Okay, there's a bunch of mess back on there. I think we're probably got, that's good to have, right? Thanks for that patience there. So yeah, one way of doing it is Oh, I really wish I'd hit save as defaults thing again on my thingamajig. And I want to do this before this run ends. So let me quickly. It's the loop between that high and that low. It's not high enough. I didn't think it was that one. Undo quickly. Here, this high and this low. Here, this high to this low. Yes, bang. Wait, no shit. Is that right or wrong? No, it's wrong. Right, cool. Well, the target I would have been aiming to would have been the 1618. The 1618. That's much more profitable. The 1.618 is obviously a much more profitable zone than the 0.618, isn't it? By how much? Well, by a whole one of the move that led us down there in the first place. While the 618 is 68% of that move that led us down. This here, 1618, is all of that. It's all of this, plus the 68%. Much more profitable target. Overall, if you're looking at Fibonacci, the most profitable target is likely to be, and this isn't facetious answers, by the way, these are genuine answers. The most profitable target is most likely to be something like a 414 Fibonacci retracement point. Wouldn't get one in on that one. What extensions do we have between these 2 points just here? I've not got any of them listed. Hold on a second. 414, way up there. So what does that line up with right now? Our prior high. So let me just put the 4414 in. Oh gosh, give me a second. Fabby, great. Just give me right. So the 4414 here. Now I'll make this green. Green. Can you see that up there? The lines maybe aren't clear. Make this Fibonacci really clear Fibonacci coming up here. Really clear. See this big thick green line up here that lines up with their previous high? That would be the 4.414 Fibonacci retracement point from the last low on this way down. If we didn't make it any further down and you wanted to do something like that, then you could. To specifically say how and where and why and what to use your Fibonacci on to be able to say that which one is the most profitable target would be wrong. Now, please, that was the opponent answer to your question. Can I then give the proponent answer to your question? The 618 golden pocket is the most profitable target on Fibonacci retracements because it is very commonly where the prices go to, and that to aim for that region will give you a way of maximizing your profits where maybe you would have taken them at the 382 or the 50%, where you could have held out for more profit without getting into the zone where things have then flipped into a bigger risk area. If you think about it from the point of view of the likely targets that you're to have within a Fibonacci after a certain event has happened, and you're looking at the prices having come between all these different, right? Sorry, just a second. Let me just draw in an example chart real quick. Right, cool, okay, so then we're drawing it and we're looking between these 2 points here in our example chart. Then what you're looking at is saying that between that after we've taken out this zone, the 236, I should draw over the number itself. After we've taken out this zone, the 236, then we have a valid Fibonacci, and we can look to these targets, and the least profitable of these targets in terms of the three that you could really kind of look to would be the 382. The middle one, the 50%, and the most profitable target is the golden pocket, and that is so frequently the case. So agreed, okay? Agreed. Now, of course, in terms of these targets also being more profitable, so this would be, again, a disagreement side of it, 786, 886, more profitable targets. Well, the risk profile between these areas is somewhat different than the risk profile down below. So if you were looking at this with a view to taking longs, and you thought to yourself, well, what are the profitable targets? And you went up to the 382, you're getting a 0.64 to 1 trade. Whoa. Over up here to the 50%, you're getting a 1.14. Up here to the 60%, you're getting over 1.5 to 1. Suddenly you're into the territory where you're actually making profit on attrition level, on a risk reward attrition level. Now, if you were to then simply not take profit there and the prices were to drop back down, then you're into the area where you're almost going to lose unless you're right, you know, more than 50% of the time. You know, so the risk to reward in your strategy here suddenly loses out. So even though you could go on to look at 2.4 and 2.62, that in terms of the war that you're fighting, and that all of these different battles can lead to outcomes which may or may not change your statistical likelihood over time, the 618 then, from a risk to reward point of view, often becomes your most profitable target, because it means that you don't experience the attrition that would happen if we saw a pullback, and you then decided, okay, look, I need to take profit because there's no way that I'm living in a world where I trade at a 0 point, at less than a 1-to-1. You know, where you're taking on more risk than your reward. This is you working for the man over here. This is you paying them. You're paying the markets. The markets are paying you here, but only just. You'd have to take profit. Up here, you're getting paid by the markets. Like, up here, good. So what do you do then? You can leave some on your table. Now, as well, along the way, you can obviously pay yourself in terms of, at this point, I can say, well, I can pay my fees of this trade and have a no risk trade in that sense. And then, of course, you're changing your dynamics. And at this point in the conversation, what starts to enter into is the nuance of your own particular approach to the markets. And I can't answer it beyond that. But to say whether or not it's the most, it's in terms of debating that out, I could get on either side of that team, of that debate team, and completely hammer the opposition, right? I mean, if you were debating that, you would want me on your team, right? Because our team would win. But the truth of it is that there is no answer to say what's the most profitable target when you're trading with Fibonacci or with any particular methodology. Hit like! Things we've covered in the past on this show include, but are not limited to, a discussion, but we're on the topic of Fibonacci as requested in a sense by the audience today, include, but are not limited to, a discussion of how to manage yourself in trades when you're looking at the 236 as a validation of your Fibonacci, and therefore to the targets that you'd be going to. In terms of the discussion we just had, was the 618 the most profitable target on the retrace from the high that we put at the start of the market? It's going up to 178. Or was 382 or 50% the most profitable target? As things stand, 50% has been the most profitable target. It's had a nice 50% retrace. What's happened here is it's come in and it's retested the gap. We know that these things happen. We would have at least anticipated a retest of this gap. We've discussed this in extreme detail numerous times, more than 5, more than 10 over the last 100 days. So I'm sure you very much are aware of how this was on the cards and now has happened to very much no surprise on my part. But the question remains at this point, and it's a very good debate to have. Which of these targets is the most profitable target? Is it the 50% or indeed the 618 where it has not gone to yet? Should the prices move on to the 618 where we see these two moving averages wanting to come in for a cross on this 1 minute time frame, then you will know, my friends, you will know that it has been a more profitable target than 50%. However, if you were trading this and looking to take profit off the table at the gap test, you would have said the confluence between the 50% and the gap is going to be, in this instance, the most profitable target. And somebody could have said, but why? We still may go on to test the 618. Why is that the most profitable target? And you, my friends, could turn around and say, well, because from this point, it's highly likely that we get a retest of the 236 to confirm that we have a valid Fibonacci before going on to your more profitable target of the 618. Therefore, my friend, at this point, I would have had a move of 1.7% combined with a move of 0.87%. That is 2.6, and then a move of another move of 0.85 just to get back to where my target is. So 3.6 something. Or a move down here to there, giving me a total of 4% on my trading. Whereas what you'd have got whilst having to sit through that period of time, would have been a grand total of 2.15%, making me nearly 100% better off than you. And at no time did I need to rely on the 618 as being the most profitable target. Live discussion and the philosophy of trading, the science of trading, done from me, a FOMO-free professional technical analyst with years and years and trader, years and years of experience doing this exact thing, to explain to you why that guy who sometimes stops chopping at the tree is making more money than you as he sharpens his axe. These are the things that we need to know to be successful to the extreme. Now, it's totally possible to be completely successful trading this using this simplistic technique of just simply looking back and saying, heck, if we go past the 236, I'll trade to the 382. I've explained it once, I'll explain it again, I'll explain it 1,000 times. If all of these lines on the screen were levels on a chart between and prices were moving between them, that's annoying. I was in the middle of making a point, Trading View. Why did you need to refresh the page? And if the prices were moving between them, then you know that the prices will offer up different risks or rewards at different areas, and that you can see things happening which may or may not actually comply with the levels that you've identified, and that there could be ways to actually trade this for greater profits. For example, on this imaginary chart that I've just had right here, level here. What was this? Level here, right? But it got broken. What was this? Then here, and so on. We know that this is how markets move. Now, incidentally, if you combine so many different schools of technical analysis together and understand and are capable of cherry picking the best bits, then you'll notice certain things along the way. For instance, this first question mark is quite simple. It was a test of a 236 which failed, so there isn't any need for that. However, it wasn't revealing itself just simply off of the support and resistance alone, was it? No, it wasn't. Then what do? Is that you trade between the certain levels. Now, I could do these examples on and on and on. You trade between the levels. At this point here, you might have taken a chunk to move past this this intermediate level with an aim for that higher up level. You might have taken a move at this circle that I've drawn in here, in order to try and take profit in this region. That would be the simplest way to trade. And in terms of the discussion that we had just there, I wouldn't shame you at all. Instead, I would turn around and say, well done, my friend. Well done. If you simply had said to yourself that on a break of the 236, I'll trade it down to the 382. And while I know that there's a potential to get 4% if you trade it all the way, I know it down and up again, like maybe Rocky might. And I know that there's the potential to get 2.15%, as maybe Homer's Ghost might, who's aiming towards the 618. And I know that there's the potential to get 1.7%, as if I was aiming towards how Rocky's first target of the gap retest and the 50% line. But while I know all of that, I'm just looking to be a consistent, profitable trader. And I'm looking to take off the table 0.37%. And I wouldn't say, or not even 0.37, it's more than that. More than that, sorry. Yeah, 0.5%. You might be looking for 0.5%. And I would say that's very good. That 0.5% right there, out of all of the things that we talk about, represents the lowest risk 0.5%, probably. And you wanting to do just trading in the lowest risk way, something that I wholeheartedly applaud. It is coming up to 10 to 3, which means that in roughly 10 minutes or so, I'll start to wind up my show and tune out. I'm not 100% sure if all of this worked. I really should have kept the record button going, perhaps, because the lessons in this show are quite phenomenal. I'm not 100% sure if everybody can see them. Just for the purposes of posterity, I'm going to zoom in here, and we can look at a few different little bits on that chart that I have zoomed in, just so that the noise of this lesson that we've gone through here can be broken down a little bit more. over the time after publishing this. Some point in the distant future, I could maybe come back and try and make this sort of thing into a clip. And these images could potentially be useful for cutting to. Although, with all those drawings and those brushstrokes on, it's quite hard to see. So it probably doesn't make any difference. This is probably a bad time to try this this thing, but that's the these are the informations that we just went over there. Every single mark on this chart is something that's been explained with at least a 5-minute lesson that goes along with it. Think about it. Think about it, everybody out there. One of the reasons I hate getting rid of my drawings off charts is because I do good technical analysis, and some of it is shit hot, and I like to look back at it and say, that was good, that was interesting. Another reason is because sometimes my own paradigms and philosophies subtly change as I look at markets slightly differently as to what's been working. Get to look back and see how that was happening at the time, laid out in a way that I can understand, reading the hieroglyphics of my own past. Another reason is because sometimes I draw nice pictures on there and they're really funny and stuff like that, and I like to look at them. But the fact of the matter actually is that when you're looking at this chart here and you see all of this noise that's on here, of which I admit there's an awful lot just in this section alone, all of it is being extremely explained, and this is only the tip of the iceberg. I've deleted this so many times and put on so much dense information on here, and in no small way is any of it not considered. It's all massively considered, and in no small way is any of it unexplained. It's all massively explained, and in no small way am I trying to put out there's any idea that complexity somehow improves what I'm doing. All of these lines are here to make it simpler as I explain really complex, extremely savvy, efficient, proficient, experienced technical analysis techniques, which only the very, very best traders out there know about. And for decades, only the very best traders out there would have had access to finding out about. Only the very best would have been able to get in amongst somebody else who was that good, who was willing to talk to them. And here I am, wanting and happy to do it without any expectation of response at all. Even sometimes not even knowing if I'm actually even broadcasting live. So this is extremely good information, which would be very, 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 very quick to be point out to people that it can look a lot like the type of noise that when somebody who doesn't really know what they're doing draws on the charts. And then if I just take a bunch of random crap and start putting it on here, then ultimately, while this is obviously actually looks like one of Jackson Pollock's mistakes, this is not a million miles away from what it can result in if you just want to make a bunch of crap and just be somebody on the internet talking about stuff. And people should criticize TA that just looks like this, which is crazy to say so clearly when I know that I've just come from this to make that point. Anyway, Monday's video got 65 impressions, says Jimmy. That was last week, wasn't it? On average, including me and Rocky, my dad, who watch every show, I manage less than 8%. Interesting stuff. I don't know what the 8% means. Would it be of subscribers? I get none. It's all good though. So I'm not complaining, by the way, Jimmy, in the chat. Jimmy, just so you know, quite sometimes I be in here saying stuff which isn't negative. Then afterwards I get back feedback from people who say that I was negative when I wasn't. So don't enhance what I'm saying by saying stuff that might be perceived as negative to make people think in the audience that in some way that I'm being negative when I'm not, because I was making a very, 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 very positive point there. Very positive point. So I want that to be very clear, right? So I'm just chucking that out there if there's any overlap, right? Because I get this so often, people telling me that I'm negative when I'm not, that I need to make sure that at all possible avenues for that thought are subject to my scrutiny, and that's one of them. So just so you know, thanks for that, everybody. Right. Anyway, look, it's 5-3. I'm dropping bombs here like it's freaking like. I actually don't think there's any a historical war analogy that actually justifies using that phrase, right? I don't. So I shouldn't do it. Right. Anyway, member, thanks for being here as always. Appreciated. Jeff, thanks so much for that. It's really appreciated. Looking back up the way, I believe I missed one earlier on as I was mid-stride. What was it? Ghost of Dead Money. More beer. Insert trading live chart in Discord advert. Trading live chat in Discord. Yeah, man. There's Ghost of Dead Money. Thanks for pointing out. There's live chat, trading chat in there all the time. Thanks for 6 months of learning to be more. Ghost of Dead Money. I think it's more than 6 months. Is it only 6 months? More than 6 months, man. Thanks so much for 6 months of being a member. But just having a quick look here. 0525. Man, it was the 25th of May when you first sent me a direct message, for example, and you'd been watching along at that point for quite some time, and you'd been a member of the Discord and everything for quite some time by that point anyway. And that was, well, we're in the 10th month of the year, so it was 5. No, it's more than 5. It's more than 6. Maybe it is 6 months, man. I don't know. Feels like longer. Thanks so much for all the support and all the appreciation and all that throughout the entire time, of course. As the same stands for every single last one of you, of course, as well. I mean, it's not like I remember all of the messages that people send me and when it happened and stuff like that. Or at least, I mean, it's not like for lack. It's not. It just seems to be the way it is. Right, cool, great. Enough of that. So let's look at some other stuff that I want to look at. Nobody's asking for any stocks today. That's totally fine. I can just do what I want to do, be what I want to be. Okay, curious 4-hour time frame flash 1337. Is that what that is? That kind of sucks, but it's there. 1327, in fact. So there's that. Let me just look around the place at a couple of different things here. 15-minute time frame 1327. Yep, it's on 1327. That's where we'll be looking to. Quick reminder, folks, then you want the magic. Here's the magic for you. There it is there. There's this. Just hide all these ones. Bum 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 bum. So if we go down to 1327, and in that immediate move at 1327, we also see the wicks go down to 1309 and touch like 1309, 1308 today. Then in that moment, then I'll anticipate the potential to go on down and go for a bigger move down the way. In which case, I'd be looking for a move between these 2 points, but it's not looking for the 113. I'd be looking for the 886 over here. So I'd be looking for a move to the 1270, right? We move down to 1327, which is going to happen. Then we go to 1309 immediately. Then we're going to 1270, or else we're not. Excellent. What is this noise? Oh, oil, sugar. I did get requests in earlier on. Sorry, we're going to soil. Sorry, soil. US soil. This is the US soil. This is there's blood in the US soil. This was pointed out by Vic Vince earlier on. It is the bloody soil of the United States. Right. So over here, the one line on the Fibonacci is funny. I was kind of got the ideas of I had images of the American Civil War there flashing in my head when I said blood on the soil of America. Ha! Oh my goodness. Oh my goodness, how patriotic of me, and I'm not even American. So yeah, right. So that's 3 o'clock. Hey, great, nice one. Definitely guaranteed tuning out when this thing goes red, but maybe even before. This and even if I've not done the reverse roll call, today, okay, so then I'm still going to just hit the button. So if it's mid-sentence, it's mid-sentence. That's what happens. That's what's going to happen today. So I'll just keep it visible. So the so yeah, right, man, you were talking about oil. What did you say about it earlier on? Something about how you wanted to short it. In fact, you donated, and I can still see it there. Also, we already filled a monthly DMI flash recently. Oh, we did. As well, weekly, monthly. Whoa, shit. So we did monthly flash on oil. Man, wow, swoof. That's some time to have been waiting, huh? Wow. Whoa. Interesting. Interesting stuff, Vic. Shit. Hide this. Interesting stuff. Well, we've been talking about it, haven't we, right? We've been talking about it. So, this is extreme, man. Extreme. I'm not sure. Since this actually did go to negative pricing and stuff, I'm not sure. In this instance, I don't think that there's any way for me to really measure this to using that extreme to say how far on, because the 1.13 going from 0 to something would be mental. Right, that was my door. Okay, cool. That was my door. That's something that needed to happen. So that would be mental. Bodies. I would go from the bodies to the I can't see. I'd go from the body to the bodies to just see if we can see. Sorry, what I was trying to say is that for this to get continuation, we're looking for that 1.13. I'll just go from the body up to there just to see how that would be. What am I doing? Sorry, it's the wrong way around. From the line to the body, and the 113 is in there at 98.04. That makes sense as well. It's right, nice round number and everything else. So like the 100 is coming up next, you know. So you'd be looking at the 100 as support. Okie dokie, okie dokie, okie dokie. Right, that's cool. Here's okay. Great. Yes. So that would be sweet, wouldn't it? It'd be interesting to see if this actually kind of is something that can also be added to the body of knowledge, right? Something that I've been introduced. I've obviously been looking at for a while to try and before telling you is about. So that's something to look to. Anyway, yeah, let's just see if that happens. I think that you're probably right though. In terms of there's a massive shorting opportunity on here. Right. Certainly this was something that needed to be done, and it's been done. I wonder what it looks like on the weekly, where that came in at here. It did get done straight away. Just a little thing here. It didn't go to the 113 straight away, I don't think, or did it? Let me just check and see, because I'm trying to work this out constantly, and I've not been doing it on the charts like this so live before for people. It did look, and we got move on further down, right? We took out the 113 just here, got to move further down. Okay. Now, it didn't happen straight away. All I'm saying is that even if we wick down here and then F off immediately straight afterwards, we will see more movements down. That's what I'm saying, right? And vice versa. So, interesting one. And then, right. So, let's actually scope this out, though, in terms of... Well, actually, in terms of what? I mean, what? In terms of what? Right, 24-hour time frame. 24-hour time frame. This one got here done quite nicely. That flash that was there. That is the person. The person. Aye, that's the person to ask though. Person. Yeah. The trough. In terms of this movements around. Looking for these moves. Looking for these moves which are like a lot less risk. We're talking about the risk as well, like the risk of moves down the way. You know, along the way so far here, just a quick pointer in terms of these moves, the sort of the lowest retrace that you're going to get is that 236. don't have the valid one. A lot of people shorten it down here. Pay yourself at that point. Take your fees off the table at that point, because it's not uncommon to see at this. We obviously came to the 236 just in here with this movement down. Now I'm going to move the Fibonacci up to this area in just a second. I'm going to move it up to here. So this yellow line that's here, what I'm about to do is move it to line up with this point. And then I'm going to look and see where's the 236 coming in at. I'm going to be asking questions about this line right here and whether or not this is where the 236 came in at on this point, etc. So let's just do that. And I'll so you can see this is how my analysis so often goes, and it's not necessarily always clear to people as I'm doing it, but look. And then zooming in and saying, look what happened again. So at this point here, when I say that there's lower risk moves to be had, that starting to move down the way and then aiming from any start of any move down, because look, there was a start of a move down here, start of a move down here, didn't work out, start of a move down here, didn't work out, you know. But then this particular one, sure, it worked out. And then this particular one, sure, maybe it'll work out. And this particular one, it worked out, you know, for that 236 movement. So this is a somewhat higher risk move when you're just looking broadly at things than if you do actually crack down here and establish that you're below the 236. You actually don't get back above it. So in terms of risk management in this zone just here, when we did move down below, we didn't move down below long time, love you, long time. No, we didn't move down like that. In this zone just here, when we came down just below it for a split second, you wouldn't say that that was much of any sort of like degree of break in this thing, you know. And it's not like when you look at the average true range, and you know the average true range on all of these candles, almost all of these candles, but pretty much all these candles, is not enough to bring you from one level to the next in one move. It's not enough. This is a 24-hour time frame, so in no single day has it moved between Fibonacci levels where you've had to miss out on an opportunity. See what I mean? Suddenly your risk to reward, if somebody says to you, are you prepared to wait for a better trade, and your risk to reward, suddenly when you know that you've got days and days for these things to play out, that you can wait for the better opportunities, the less risky ones. So if we did break below one of these levels, then maybe you could play from one level to the next more confidently than that you'd be catching the top at the time, because the movement between 0 and 236, between the movement between 0 and 236 involves you having to catch a market where you're thinking, well, is that it turning around? And sure, it could look like that, could even look like this, give you a double top, and then just go on up the way, okay? And maybe you've got even something in this period like a wedge, and you're saying, oh, there's tons of reasons, and there's this elasticity, we're totally going to here. But you're buying that risk at that point, right? Whereas when you're buying the risk of moving down past these areas, etc., you're buying a different type of risk, and it's a lower risk trade. It's a lower risk thing, which is why it's interesting. Anyway, sorry, instead of doing the TA technically on oil, I went into education mode. But the simple point being there for us is that I don't think that you're wrong, Vic. That I'm looking between, in terms of Fibonacci's, the area I'd look to is the 2nd of November 2020 on the 24-hour time frame to say where we are just now. Over here, and you might remember the 2nd of November actually 2020, it did look like things could maybe start to get interesting again, but they didn't. Obviously, this indicator here at the time giving us the best knowledge in that of all of this period of time too. It's kind of interesting one. In all this period of time, when we started moving up, where was the riskiest time? Where was the time when you'd have felt the worst? In all of this, we're moving up. 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 Oh, we're moving sideways. Oh, are we going to crack down? Oh, are we going to go negative again? Is it happening? Is it happening? Are we going to go negative again? In this period of time, that's the time when, out of all of this, you would have been the most worried about movements towards the downside. And what did you have during it? Oh my goodness. Not that I need to advertise this thing much, but you had during it an indicator which is right more than 95% of the time telling you that it wasn't going to go down, you know, forever. It doesn't necessarily giving you the best entry on it, but it gives you your exit. And oh my god, an exit indicator. We've got 20 minutes left maximum. Oh my god, the only one that actually works, that gives you the best profits in the world and sophisticated understanding of the thing, so that you could understand what would happen at certain points, how things might go. Interesting little one for us here as well is that we didn't see the continuation, right? So I'm still working on this one. It's not like something that I talk about all the time, but because I brought it up today, I'll continue talking about it during this little bit of the show as well. That you know, I'm looking here, I'm saying between that high to that low, you know, where did we come in? Did we get into the 113? And we didn't get that immediately on that wick. Instead, we dropped back down from that point to wherever else. You know, we dropped down a wee bit. It was a few days, but then afterwards, when we did take out the 113, that was our next inflection point. That was our next support point, and we were trending then thereafter. And it's just an interesting interplay in the dynamics of the markets itself. Now, I can't be bothered actually explaining to you about this philosophy here, but just suffice it to say that there's a reason why I can draw a Fibonacci in from here, and there's reasons for this. Okay, just suffice it to say that. Whereas I would never say to anybody ever under any other circumstances that there's ever a reason under any other circumstances to be drawn in random piece of shit Fibonaccis. The closest that you can get is what I'm about to do just now to bring this Fibonacci conversation really into perspective. Okay, and this is the last part. This is the last thing. This is education today, which is phenomenal education today. I'm actually impressed myself with the way that this is all. I'm live right now, impressed myself, listening to myself thinking, shit, Rocky, you're doing a great job. I would like to be in your audience right now. If I was in the audience right now, I'd hit like, I'd say, great, well done, you're doing amazing. Earlier on, we spoke about Fibonacci. Also, as well, I'd be in the audience right now, knowing what I'm about to do, knowing what I'm about to say. I mean, like, fucking do it, man. This is so good. Do it. So, thanks, me. About to do it. Right. And then I suppose I might as well say thanks, Jamie, and everybody else who also probably no doubt knows what I'm about to do if you're listening, but I don't expect you to be. So you're talking about the Fibonacci's and on the 3 minute to the 1 minute time frame, and here we are looking at the 24-hour time frame and asking questions as to whether or not we'd be trading this thing just here. I think it's quite obvious that this is the low just here that you'd be drawing in your Fibonacci from if you're to be measuring from just this point right here. It lines up nicely with this one. If there's to be another one, then it's over here in this area, but we'll take it from just here, okay? And so you'd have another Fibonacci. So then you start to get these layers of Fibonacci's. So here's your 236 suddenly, and where does your 618 line up with? Where does your 618 line up with? The 236 of the other Fibonacci. Oh my god, Rocky, you just did it again. Transformational knowledge in front of your eyes. This is the best. Furthermore, you can see now that between these two levels, there's various other levels. There's in fact now 1, 2, 3, 4, 3 solid levels between the key areas that we're looking to, that we described for how you could trade this thing. And along the way, if there's any failure to get down to 236, you'll see it here. First off, if you are trading down the way for that 236 because you think that there might be a turnaround, because you're looking to see if there's a bigger turnaround on a bigger time frame, and you're looking for that 236 so that you can aim down to one of these other targets, what do you need to see happen first? What do you need to see happen? You need to see happen is taking out this 236, this white line, this 236. So this is the 236. So from the broader perspective, we've got this 236 down here, which lines up with the 618 golden pocket of the smaller Fibonacci. And here we've got this 236. So if we're aiming to the 236 on the bigger time frame, then we need to take out this 236. So to go back then to where we were before and to say, but Rocky, I know that that's where the target is, but how does that help me to get to that point from where I am right now? How does that help? to get to that point from where I am just now. And I can say to you so obviously and clearly, then therefore, that on the 24-hour time frame, using and it's regardless of time frames. As you can see, I could have easily spread this out and make it look more magical with the waves of the thing moving up and down if I went to the 1 hour time frame, etc. But it's nothing to do with time frames. It's in fact it's to do with the levels and the distances between those areas. And of course, then as an effect on that, if you consider what the true range of anything is over a period of time, then 4 or 5 marks down the line, then you can say it's about time. So if you know that there's a range, if you know that there's a true range, an average range where the prices, generally speaking, 90% plus of the time don't move more than within a specific period of time, and that then you can say, well, perhaps we can say that put a time element on this thing, and then afterwards you could consider well, you'd have already drawn in your Fibonacci's long ago, so it wouldn't be a consideration to you at that point. It would be a moot point, M-O-O-T. That's what that means, moot, M-O-O-T. At that point, it becomes a moot point. Right, cool. Anyway, for this one here, you know that if you want to take it, if you take it 79.21, that you could so easily be aiming towards 68.51, offering up to you a move which is a 13.27% move. And if I says to you that you've got these different risk to reward areas that trade in between chunks, if you want to trade between chunks, you've got levels, and you know that prices can go between them, and that you're looking to just trade between the chunks and just trade between the chunks. And also if you know that you've got Fibonacci's and that 236 is what creates a valid one, and that we so often go to it then move on away because it's the shallowest retrace. But then we can also then see at times we get another 236 and it lines up with a 618, and the 618, Homer, is the 618 the most profitable area to trade to? And this now turns, and this conversation here turns that question, Homer, that you asked earlier on into what could be considered, you know, I would say if I was running a course, this is like thesis level type of discussions. Now, anybody who happened to ever be doing a course by me or whatever, you know, this is like this sort of thing here, you'd be thinking, oh, but I would need to try harder for it to be like thesis level. It's like, no, look, this takes years and years of experience to get to be able to do that sort of stuff, to be able to have that transformational moment, to know before you've drawn it in what it's going to look like and where the bits are going to line up with because of how these things go together. I honestly can't hardly explain it myself. So I'm living it. So I know that there isn't like that. So no, you're all right. You could get, that's a pretty good that's a pretty good thesis. It's a pretty good one. You'd be, you know, you're doing well. I would hope to see other more inventive and original things because I've laid this out before. It'd be more interesting to see somebody come up with something else if they were to be doing that sort of thesis idea. Anyway, look, this light's flashing. I'm going to spend the next wee while reading the chat and chilling out. And then if anybody wants to do any sorts of donations and any of that sort of crap, you do it now because there's 12 minutes maximum until I hit the end button. And I'm hitting the end button when this thing flashes red, no matter what, even if I'm mid roll call. And I'm going to just see how the chat's getting on and see how he's been doing because this is cool. Well done, you've done amazing, says Katie Babes. Thank you so much. Tradespawn in there chatting. He says out audience at 8% 6 months ago. I don't know, but not worried, not reading that. How come other channels growing the audience numbers? Yeah, that's totally good point. Rocker Crops, check your donations backlog. Checking. Anonymous. Aloha and good day. Can we add this to Kerr Bingo Ball, please? And thanks from Anon. Okay, cool. Little Lord Rocky Outcrop's tummy sore. Here's the poor boy with a sore. What? Where did you write in the book, Rocky? I know, it's funny. I just had to flip it. Flip it upside down, turn it around. I need a new page. Cur Anon 1975. Yep, great, cool. Thanks so much for that. Really appreciated. Got a rough idea who it was. Thank you. You're always appreciated. You are. JT, and also I'll I've got my routine. I still have things that I need to do, and I'm going to do that. I'm looking forward to it. Vic Vince sent $5.78. Thank you so much. Yes, great. JT124 sent $5 super chat. Thanks so much. Chippy, earlier on, thanks. Been wondering about the fibs and where to start them. Yay, there we go. $4.99. Hopefully that's good. Now, by the way, when I say, hey, this is super amazing education, that isn't to shame people who aren't following along. This is so that everybody knows that this is it. This is it. I'm being serious. I'm trying my freaking hardest, and I'm able to put myself up there on a pedestal to do this in the first place at all. Then furthermore, on a live broadcast, put myself up there on a pedestal and say, this is really good, which is very much an invitation, which I don't want to put out, and I would rather not have to deal with at all. But it opens up the door for other people to say, it's not good, you know, and to challenge me on it. So I'll stop saying that it's very good now, since I suppose it doesn't serve any benefit to the audience and just serves a benefit to other people who might come along and try and, like, you know, peer review me, heaven forbid. But of course, peer reviewing these days is probably most likely seen as being a troll by people. So I mean, unless your name is like, you know, unless I know who you are in advance, don't do it. Probably, but it's an invitation. It's fine. Purple Haze became a member. That's just an update for me, telling me that happened. So yeah, Texas Thanker 1999. Hi, this is Mrs. Thanker. Was thinking about opening up a position in SHIB. Would love to hear your thoughts. Oh, I SHIB. Mrs. Thanker as well. Going to the wrong chart there. I'm not going to. I'm going to tune out whenever that thing goes funny. But we've got what, 8 minutes, so I'm all right. Like, I'm all right. Don't worry about it. Desktop, here we have it. Hello. Stuff to show you on the charts here is incredible in terms of trading. Incredible, by the way. Which one is this? If I'm up on like the Binance chart, because I know that it's on here. Yep. Right. I've got some stuff to show you here, which is incredible, and you're going to be mind blown. Right? You're going to be mind blown here. So if you're not already mind blown by my indicator, you're going to be mind blown. There's that one, that example of it here. Very good, very good. Little example is, let's just also test this thing, since this is something I didn't do yet. Up to the high of that thing. Pop over here and let's see, where's 113? Did we touch it? Did we get anything on it? Oh, we didn't quite touch it. We didn't even quite touch it. Yes, that's right, people. I'm making this thing. I'm trying to make things, every part of it, to the exact penny, but also as well using established convention in terms of what's correct and not correct. Yeah, I'm trying to do things that are using these tools out there that already exist to do good work. I'm not a bad workman, and I won't blame my tools or that. Anyway, here we have it. So that part, but look as well. 3 minute time frame. Was it the 3 minute time frame? Woomph. Hello. Hello. What happened here? Let's just measure this one. It's quite obvious to the eye. Well, we wicked down. Nice, actually, tell you what, with these examples. It wasn't this chart that I was looking at for doing this 113 thing. It's just, you know, and all that recently, but there you have it. Nice. Wicked down, touched it, came back up, got a continuation on. Not including that into the official rule book of this thing here, just pointing that out as we go along, because we make this as a community in a sense. Well, you know, it's me that makes it, but whatever. And then the 5 minute time frame. I know. The 3 minute time frame. The 3 minute time frame. The 3 minute time frame. Looking to the left. Where is it? Where is it? No, this. I know that this drop down here to 57 came from somewhere. So give me a second here. 2 minute time frame. 2 minute time frame. Yes. Yes. Right. The other rule about this thing is that if you don't do it, if it doesn't happen, right there, then normally you get 90% of it anyway. 90% of it anyway from the very peak. 90% of it anyway from the very peak. Yes. 90% of it anyway from the very peak. Where's the ruler? Where's the very peak? Over here. Where did we go down to? Here. That is so what's the, so for us to have gone down, the full way to take out the move would have had to have gone down 36.83%. In the end, the prices went down 35.98%. So we were out by less than 0.5%. Less than 0.5% move down to here. Less than 0.5% move down to here with this dump down. Less than 0.5% move away from the move down here. We got more than 90% of the move down, right? You probably can tell at this point that I'm building up to something, and in a sense it's this, and it's the question between the equilibrium that I was arrived in these points between this movement here. Does that rule out the conversation of us going down further? And then in the 5-minute time frame, is that target of 0.00004 realistic target for something? A realistic target come from where we are just now. Is it? Well, what is 90% of that, in a sense? If we wanted to go down the full way, that would be a retrace of 52.91%. So how about you aim for, say, 50%? 50% from there. 50% from there. Say you aim for 50% from there. Now, looking back as well, here's your last big inflection point before we went towards the top side. Drawing this in up to, well, there's a high, and it's invisible, so I can't use that Fibonacci because it's annoying. Let's just give me this here. Right, yep, that is the high. And the where's the 50% line coming in at on this one as it happens, just out of curiosity, just from a Fibonacci point of view, it was already down there, right? Where's the 618? Where's Homer's 618 coming in at? Over there. So that's the, oh, that's 6.5, but you can see down there it'd be 50. So those are big considerations for us. Chuck this in the bin for now and say, where are we with regards to this pullback that happened here? 618 golden pockets there, and the 50% line operating between the two of those. So just a second, I'll come back around to show the implications of that, but I'm not interested in pointing out those things. Instead, I wanted to point out the 886 there. We didn't take that out, but that could be somewhere to look to if we do get continuation from this point onwards. That would be up at 84. There's obviously an extremely bullish asset, but it's bullish and it's manipulated. It's used like, hey, it's bullish. Retail are going to end up holding the bags on this one, and that. But yeah, sure. It's really bullish. Really bullish. It really is. Now, we know that there's golden pockets in and around that area. We know there's 50% just there as well. From this low to this high, and yes, you would have to piece together all of these individuals. So, you know, sometimes when I do the show, there's just Fibonacci over Fibonacci over Fibonacci, and it gets kind of complicated, and it's hard to see which one's which. This time, it's not even the full Fibonacci, it's just the relevant numbers, and they're not overlaying each other, but you might want to then kind of run through this process yourself if that's helpful to you, so you can see. But the next point that I'm trying to make here is that we're the 236, where's that at? And you can see that's just above us right now from where we are. So obviously we're in a valid Fibonacci right now. If you're aiming to the 382, where's that? Well, we've already satisfied that one. Therefore, if we do take out the 236 in here, which is at a line which we're going to go to, as I'll zoom into the final points, the final seconds of this video, I'll zoom into. If we take out the 236 again, then there's significance there of that for two reasons, more than just the 236. But we've been to the 382, crack below the 382 in there at the 72 area. Then it's absolutely reasonable and predictable to look to 69. Yeah, sure, definitely. But even just now, you'd be looking to somewhere more realistically down to the 618 down here for this higher low overall, hoping for a higher low, in fact, which has just been followed in with a lower high. So be pretty kind of not that great, but it would be where it is. And that's that. So I would recommend, in a sense, that unless you really got an appetite for risk, and that's what you're wanting to get in on, that risk, then to hold off, because and then in future to look at assets that have got parabolic moves earlier on, a couple of days ago, in terms of that sort of thing. Right, time's up, right? So instead, we're just going to have to get right into the nitty gritty and do this bombshell. Do the bombshell right here. So there's your 236 left back on. This as us zooming on in the way, zooming on in, zooming on in, zooming on in. And what do we see in the final seconds of the show here for us is that this lines up almost pixel perfectly with the top end of that thingamajiggy. Therefore, taking this out and looking up a wee bit further towards this area where we see the 50 simple period moving average at that yellow dot, that's what that represents, you'd be looking at at the potential for that continuation. Now we're still moving down the way, and we've got a couple of different ideas. If we take it from this high to this low, the Fibonacci, and we look for that continuation flip point on this thing, okay, then where does that take us into? Bing bong, on top of the 50 simple moving average. Oh my goodness, is this guy like Prince, like Prince or something like that? I mean, this guy here is what am I? It's amazing. It's like, did you ever see live music from Prince? That's what this is like. Fucking hell. Oh, I swore at the very end there. Damn. Right. So then on that in that same sense, if that is to be the case, if that is where to be the case, then where else could you look to for targets on this thing? Say you went to any of these, then how would that change the dynamic of this thingy? Well, this is obviously the 382 target we've already been at. We've discussed that one already. But if we were to go for that 113 move, then that's taken out the 50 simple moving average. If we were to go down to the golden pocket here, then we can see that our 113 area is coming back up to market structure overall over here. So so we know when looking at this thing with regards to the potential movements this could have to more downside here, which are these laid out below, that ultimately we will be going back to that line. And when we go back to that line, it will mean an awful lot, and I will leave that with you. This has been, without a shadow of a doubt, one of the greatest videos that has ever been made with regards to technical analysis that has ever been made. Full stop. Published on YouTube, published in private institutions, published by the people who are training the people who manage the most money in the world to teach them about something better than any paid course in the world. Today, right here on this show with me, live, done live, using live, real life targets, because I'm a real life trader who does not piss about and delivers to you the best information. Never, ever, ever has anyone ever come close to it ever before. This is the best in the world. Thanks so much for joining me.